The family dinner invitation came via text from my mother on a Tuesday afternoon. Bob and Linda are in town. Dinner Friday at 7:00. Don't be late. No, please. No, we'd love to see you. Just the expectation that I'd show up, take my usual position as the family cautionary tale, and leave quietly after dessert. I was 32 years old, and for the past decade, my family had been waiting for me to admit that day trading was a mistake. That leaving my engineering job at Boeing had been impulsive and foolish. That I should have listened when Dad said, "Nobody beats the market. Are you coming?" Mom called the next day to confirm. "I'll be there. Good. And David, please don't talk about your trading at dinner. Bob's been having a raw quarter with his portfolio, and I don't want you upsetting him with your theories." My theories? As if a decade of consistent returns was just speculation and luck. "I'll keep it to myself," I said, "thank you. And wear something nice. A button D down at least." Bob's bringing his new business partner. I arrived at my parents' house in Westchester at 6:58 p.m. on Friday, parking my 8-year-old Toyota Camry behind Uncle Bob's new Mercedes. Through the dining room window, I could see the table already set, wine glasses gleaming, my mother fussing with the centerpiece. Dad opened the door before I could knock. "David, you're here." He looked me over. Jeans, polo shirt, the leather jacket I'd owned since college. His expression suggested I'd failed some unspoken test. "Come in. Everyone's in the living room." Uncle Bob dominated the space as always, standing by the fireplace with a scotch in hand, holding forth about market conditions to a captive audience. My Aunt Linda sat on the sofa beside my mother, a younger man in an expensive suit. The business partner presumably nodded along to Bob's pronouncements. "David." Bob's voice boomed across the room. "There he is still playing the markets. Something like that. Dangerous game. Day trading. Most people lose their shirts." He turned to his business partner. "Marcus, this is my nephew, David. Smart kid, but got bitten by the trading bug. Left a perfectly good engineering job to gamble on stocks." "It's not gambling," I said quietly. Sure. That's what they all say." Bob laughed, and others joined in politely. "How's it working out for you?" "I'm managing. Managing? That's code for barely staying afloat, isn't it?" He winked at Marcus. "I tried to set him up with a friend at Meal Lynch. Proper wealth management position, stable salary benefits. But David here wanted to be a cowboy." "I appreciate the thought, Uncle Bob. Still living in that studio in Queens?" "Yes, see, he gestured with his scotch. 10 years of trading and still in a studio apartment. David, at some point, you need to face facts. The market isn't something you beat from your laptop. Takes Capital Connections institutional backing. Not some kid with a Robinhood account." "I don't use Robinhood." "Whatever you use, it's the same thing. Retail trading is for amateurs." Dad appeared with drinks. "Bob's right, son. We've been telling you this for years. There's still time to get back into engineering. Boeing might even take you back if you asked." "I'm not going back to Boeing." "Then another firm?" Mom interjected, emerging from the kitchen. "Someone must need engineers." "You have a degree from MIT. For heaven's sake, you're wasting it." Marcus, the business partner, spoke up. "What's your strategy?" "Technical analysis, fundamentals, quantitative algorithms, mostly pattern recognition, statistical arbitrage, some machine learning." Bob laughed loudly. "Algorithms? Marcus, you hear this? He's got algorithms. Kid, every hedge fund in the world has algorithms. They've got PhDs in supercomputers and billions in capital. What do you have?" "A laptop and some YouTube tutorials." "Something like that?" I said again. "He loses money on stocks," Bob announced, turning back to the room. "Been doing it for 10 years. At some point, it's not bad luck, it's bad judgment." "I never said I was losing money. You're living in a studio apartment in Queens. You drive a car that's nearly a decade old. You dress like a college student." He gestured at me. "Those aren't signs of a successful trader. Maybe I'm good at managing expenses. Or maybe you're too proud to admit this isn't working." He drained his scotch. "It's okay to fail, David. It's not okay to waste your life on a fantasy." Dinner was called, and we moved to the dining room. The seating arrangement was familiar. Bob at Dad's right hand, Marcus beside him, Linda and Mom forming the inner circle. I was at the far end next to my younger cousin Sarah, who at least had the decency to look sympathetic. "Uncle David," she whispered as we sat down, "don't let Grandpa Bob get to you. He's just cranky because his portfolio is down this year. It's fine." "Is it true you're a day trader?" "Not exactly. I run a trading operation, but it's more algorithmic than traditional day trading." "That's cool." "I'm studying computer science. Maybe you could tell me about it sometime?" "Sure." Before I could elaborate, Dad was tapping his wine glass. I want to thank everyone for coming tonight. Family is everything, and it's wonderful to have Bob and Linda here along with Marcus. Bob, you were telling me about the new fund? Bob launched into a detailed description of his latest investment vehicle, a private equity fund targeting mid-market acquisitions. He threw around numbers casually. $200 million in committed capital, 12 portfolio companies, projected returns of 15 to 18% annually. That's the difference between amateur and professional investing, he said, looking pointedly down the table at me. Structure, discipline, institutional quality, due diligence, not just throwing darts at a board and hoping something sticks. I don't throw darts, I said. Algorithms, darts. Same difference when you're working with pocket change. How much capital are you trading with? David, Marcus asked. His tone suggested genuine curiosity rather than mockery. Enough ballpark. I hesitated. I'd prefer not to say see, Bob jumped in. Can't even disclose his capital base. That's because it's probably 5 figures, maybe 6 if he's been lucky. Marcus, our fund has $200 million in committed capital, and we're raising another $300. That's how serious money works. The conversation moved on to market conditions, interest rates, the Fed's latest decisions. Bob dominated the discussion, and others nodded along. Dado occasionally chimed in with observations from his own portfolio, mostly mutual funds and blue-chip stocks, conservative and safe. What's your take on the Fed's position, David? Marcus asked during the main course. I think they're behind the curve on inflation, but their hands are tied politically. Behind the curve? Bob logged. Now he's a Fed expert, too. Kid Jerome Powell has forgotten more about monetary policy than you'll ever know. I didn't say I knew more than Powell. I think they're behind the curve. Based on what? Your algorithms. Based on bond yield curves, commodity price movements, and currency valuations across 14 different markets. 14 markets? Bob repeated mockingly. You're tracking 14 markets from your studio apartment? Yes, with what? Your laptop and some free data feeds. I have adequate resources. He turned to Marcus. Adequate resources? That's wonderful. Meanwhile, our fund has a 40-person research team, direct lines to company management, proprietary data partnerships with 3 major financial institutions. But David here has adequate resources. I continued eating my salmon and said nothing. The problem with retail traders, Bob continued, warming to his subject, is they don't understand scale. They have a good month and think they've cracked the code. They don't understand that sustainable returns require institutional infrastructure. What would you consider sustainable returns? I asked quietly for a fund our size 15 to 18% annually. Anything higher is unsustainable long-term. What if someone was consistently returning higher? Then they're either lucky or lying. Warren Buffett averaged about 20% over his career. Anyone claiming better is either a fraud or headed for a spectacular blow-up. What about 30%? Bob nearly choked on his wine. 30% annually sustained. Impossible. Not without taking on catastrophic risk. Why is that impossible? Because mathematics, David. The market has fundamental constraints. You can't generate 30% year after year without either massive leverage or fraud. It's fantasy. I nodded and returned to my dinner. Mom tried to change the subject, asking Linda about their recent vacation to Tuscany. The conversation shifted to travel restaurants. The usual safe topics, but I could feel Bob watching me, High's earlier amusement replaced by something sharper. You're being very quiet, he said during dessert. Usually you at least try to defend your trading. Nothing to defend, really, because it sounds like you're suggesting you're getting 30% returns, which would be laughable if it weren't so sad. I didn't say that. You implied it. You asked what sustainable returns were. I asked a hypothetical question. A hypothetical based on your own performance, I assume? He leaned back, swirling his brandy. Fine, I'll bite. What are your actual returns, David? Last 5 years since you started? Let's hear it. I'd rather not. Of course you wouldn't because the numbers don't exist, or they're terrible, or you don't actually track them properly. He looked around the table. This is what I'm talking about. Real investors can cite their returns instantly. They have audited statements, verified track records. Amateur hour over here can't even give us a straight answer. My phone buzzed on the table. I glanced at it. A notification from my Bloomberg terminal app. Then another and another. Popular tonight, Bob said sarcastically. Let me guess. Your algorithm spotted a pattern. Something like that. Mom's iPad sitting on the sideboard suddenly lit up with a notification. She glanced at it, then did a double take. Oh my goodness, what is it? Linda asked. There's a Wall Street Journal alert about a trader. Alical trader. He picked up the iPad reading. Her face went pale. Oh my God, what? Dad stood up, moving to look over her shoulder. It's the Wall Street Journal named their Trader of the Year, someone local. Someone who… She looked up at me, her expression stunned. David? The table went silent. What about David? Bob asked impatiently. Mom turned the iPad around, showing everyone the screen. The headline read, Local Quantitative Trader named Wall Street Journal Trader of the Year. 4.2 billion strategy revolutionizes algorithmic trading. My photo occupied half the screen. A professional shot from a conference I'd spoken at 6 months ago. That's not. Bob reached for the iPad. That can't be, but it was. The article detailed my 10-year track record. Average annual returns of 34.7%. Total assets under management of $4.2 billion. A quantitative strategy that had attracted institutional investors from around the world. For billion, Dad said faintly. David, you manage $4.2 billion as of this morning. Bob was scrolling frantically through the article, his face cycling through emotions. This says you started with $50,000 10 years ago. $47,000. Actually, my savings from Boeing, and you've turned that into. He couldn't seem to finish the sentence. My personal stake is about $900 million. The rest belongs to institutional investors who joined once I opened the fund to outside capital. The silence was absolute. Sarah was staring at me with her mouth open. Marcus had pulled out his own phone, frantically searching. Linda looked like she might faint. Wait, Bob said, his voice strange. Institutional investors who? I'd rather not disclose client information. David, Dad said quietly. The article mentioned some of them. CalPERS, Yale's endowment. The Sovereign Wealth Fund of Singapore, among others. Yes. Mom had found another article on her iPad. This one is from Bloomberg. It says, David's fund was closed to new investors 3 years ago because of capacity constraints. There's a waiting list of over 200 institutions trying to invest. 247, I corrected. As of last week, Bob was still scrolling, his hands shaking slightly. Your 5-year return, it says here, 187%, 186.3%. They rounded up. That's impossible. It's verified by 3 different audit firms. Everything in that article has been fact-checked extensively. Marcus had found a different piece. Forbes has you listed as one of the world's top 50 traders under 40. Net worth estimated at $900 million. The estimate is reasonably accurate. But you live in a studio apartment. Mom said weakly in Queens. I like my apartment. It's close to my office. What office? Bob demanded. I have a small team in Midtown, 23 people. Quantitative researchers, developers, risk managers. 23 people, Dad repeated, running $4 billion. We're lean by design. Overhead eats returns. Bob had set down the iPad and was staring at me with an expression I couldn't quite read. You let me sit here for an hour calling you an amateur, telling you to stick to your day job. And you never said anything. You didn't ask. I called you a failure. You called me many things. None of them were questions. But you could have corrected me. You could have told us. I tried multiple times over the years. You weren't interested in hearing it. Mom was scrolling through what looked like old emails on her iPad. Oh, God. Last Thanksgiving, you mentioned your fund had grown. I told you to stop gambling and get a real job. I remember. And the Thanksgiving before that, you said you'd taken on institutional investors. Dad said it sounded like a pyramid scheme. Dad had gone completely white. I said that. I actually said that to you. Yes. And you were managing billions of dollars. Not billions then, about $800 million. But yes. Uncle Bob pushed back from the table suddenly. In need air. He walked out to the patio, Marcus following after a hesitant moment. Through the window, I could see Bob pacing his phone to his ear, probably calling someone to verify what had just learned. David, Linda said carefully. Why didn't you tell us, really? I did tell you repeatedly. Noon wanted to hear it. But you could have been more explicit. You could have said, I manage billions of dollars. Would you have believed me? Or would you have thought I was lying? She opened her mouth to answer, then closed it. Sarah was reading something on her phone. Uncle David, there's a whole profile on you in Institutional Investor magazine from last year. It calls you the most mysterious success story in quantitative trading. Why mysterious? Because I don't give interviews. I don't attend industry events unless necessary. I focus on the work. The work that generated 34% returns annually for a decade, Marcus said. Returning from the patio. Mr. Chin, can I call you David? That's extraordinary. Genuinely extraordinary. Do you realize how many funds would kill for that track record? I'm aware. Bob is outside having what I think might be a panic attack. He's been managing his fund for 15 years and averaging 15%. You've been doing this for 10 and averaging 34. Different strategies. His approach is valid for his model. That's generous considering he spent dinner mocking you. My phone rang. I glanced at the screen. My chief investment officer. Excuse me, I need to take this. I stepped out to the hallway. David Chin. David, it's Rachel. The Wall Street Journal article just went live. We're getting inbound calls from everyone. Bloomberg wants an interview. TMBC wants you on Squawk Box tomorrow morning. The Financial Times, Reuters, everyone? No interviews. That's what it told them. But David, you've been named Trader of the Year. This is major press. It might be worth no interviews. Issue a brief statement thanking the Journal and noting that our investment strategy remains unchanged. Got it. Also, we've had 14 new institutional inquiries in the past hour, including 3 sovereign wealth funds. Add them to the waiting list. The waiting list is getting longer than our actual client roster. Then we're doing something right. After E hung up, I returned to find the dining room in chaos. Everyone was on their phones reading articles, looking up my fund, checking my track record. Bob had returned from the patio. He looked like he'd aged 5 years in the past 30 minutes. David, he said hilariously, I owe you an apology. You don't. Yes, Ito, I called you an amateur. I mocked your algorithms. I suggested you were gambling away your savings. And the entire time you were running one of the most successful trading operations in the world. You were working with the information you had. I wasn't working with any information. I was assuming. I was judging. And I was completely catastrophically wrong. It happens. How can you be so calm about this? I shrugged. Getting angry doesn't generate alpha. Marcus laughed. A genuine surprised laugh. That might be the most trader thing I've ever heard anyone say. Bob pulled out his phone. David, I need to ask, and I know this is awkward given everything I said tonight, but our fund has some capital. We're looking to deploy high-quality external managers. Would you consider? No, you didn't let me finish. You were going to ask if your fund could invest with mine. The answer is no. We're close to new investors, but for family, especially for family, I don't mix personal relationships with investment decisions. His face flushed. I see. It's not personal, Uncle Bob, it's policy. I have 247 institutions on the waiting list, including some of the largest pension funds and endowments in the world. I can't show favoritism, evento family, especially to family. That's how you protect relationships. Mom had been quiet reading article after article. David, there's a piece here from 3 years ago when you closed the fund to new investors. You were managing $1.8 billion at the time. You turned away, oh my God, you turned away the Harvard endowment. Their investment timeline didn't match our strategy. You turned down Harvard. I've turned down a lot of institutions. Fit matters more than prestige. Dad spoke up his voice. Ruffson, I don't know what to say. For 10 years, we thought you were throwing your life away. We worried about you. We pitied you. And all that time, I was building something that worked. Why didn't you make use understand? I tried. Dad, you didn't want to understand. You wanted me to fit into your definition of success. Stable job, corporate ladder, safe choices. What I was doing didn't fit that definition, so you dismissed it. But if you'd known I was managing billions, you would have respected me. If I'd still been managing thousands, you wouldn't have. That tells me the respect wasn't about me or my work. It was about the numbers being big enough to impress you. The table went quiet again. Sarah broke the silence. I think it's cool that Uncle David did it this own way, even when everyone told him he was wrong. Thank you, Sarah. Can you really teach me about algorithmic trading sometime? If you're serious about learning, yes. My phone buzzed again. A text from Rachel. FT wants to do a feature on your strategy. I know you'll say no, but they're being very persistent. I typed back. Still no focus on managing client communications. The clients are thrilled, by the way. They're getting calls from everyone asking how they got into your fund. Tell them to maintain confidentiality agreements. When I looked up, everyone was watching me. Work, Marcus asked. My team, the media attention is creating some noise. I imagine it is. Trader of the Year is a big deal. The track record is what matters. The award is just recognition. Bob had been quiet, staring at his brandy glass. David, can I ask you something? And I promise no mockery this time. Go ahead. How did you do it? Really? How did you go from $47,000 to $4.22 billion in 10 years? Hard work, pattern recognition, risk management, staying unemotional when others panic. That's not an answer. That's a fortune cookie. I considered how much to explain. I built algorithms that identify statistical inefficiencies in the market, small edges that compound over time. I kept overhead low. I stayed disciplined about position sizing and risk limits. I didn't get greedy, and I invested profits during the early years instead of taking income. That's it. That's the simplified version. The actual process involves multivariate regression analysis, machine learning models, tickle-level data processing, and about 10,000 hours of coding. But fundamentally, you saw patterns others missed. I saw patterns others didn't look for. Most traders are looking at the same data the same way. I look differently. Marcus leaned forward. Would you be willing to speak at a conference? The Quantitative Trading Summit in Singapore? I'm on the planning committee. We'd pay speaking fees, expenses. No, I haven't even mentioned the fee. It doesn't matter. I don't do speaking engagements. You spoke at a conference last year. That's where your photo came from. That was a favor for a mentor. I generally avoid public appearances because of privacy. Because every hour I spend talking about trading is an hour I'm not trading. Bob shook his head slowly. You're managing $4.2 billion and you still care about putting in hours. The capital is irrelevant. The process is what matters. You don't maintain a 34% return by resting on past performance. Dad was reading something on his phone. The article says you worked 8-hour weeks, that you're in the office by 5 hours a.m. every morning. 5:15 usually, but yes, for 10 years longer. I started building the foundation algorithms while I was still at Boeing. While working full-time as an engineer? Yes, Mom's eyes were watering. David, we told you to get a real job. We said you were wasting your life, and you were working our weeks building something extraordinary. I was doing what I loved. That's not waste. But we made you feel like a failure. You couldn't make me feel like anything. I knew what I was building. Your opinion didn't change the data. That's very, she trailed off, logical, I finished. Emotion doesn't help in trading. It doesn't help in life either. Uncle Bob drained his brandy. I need to say this and I need you to hear it. You were right about everything. About leaving Boeing, about the algorithms, about the trading. You saw something we couldn't see and you had the courage to pursue it when everyone told you that you were wrong. That's not just impressive, it's remarkable. Thank you. And I'm sorry for tonight, for all the times before tonight, for every condescending comment and dismissive joke. You deserve better. I appreciate that. Will you forgive me? I looked at my uncle, a man who'd built a successful career, who'd achieved genuine accomplishments, who'd let ego and assumption blind him to what was happening right in front of him. There's nothing to forgive, I said. You made judgments based on surface-level observations. Most people do. The lesson isn't about forgiveness. It's about asking better questions before forming opinions. He nodded slowly. I'll try to remember that. The rest of the evening passed in a blur of questions. How did the algorithms work? Where did I learn quantitative analysis? How many computers did it take to process the data? Who are my clients? Could I share any of my strategies? I answered what I could without revealing proprietary information. Sarah took notes on her phone, genuinely interested in the technical aspects. Marcus asked thoughtful questions about risk management and portfolio construction. Around 11 I stood to leave. Stay, Mom said quickly. We barely got to talk to you. Really talk to you. I have the Asian markets opening in 6 hours. I need to be in the office on a Saturday. Markets don't take weekends off globally. Dad walked me to the door. Son, I'm proud of you. I should have said that years ago. I should have trusted that you knew what you were doing. You trusted what you understood. That's human nature. Will you come back for another dinner so we can actually know you instead of assuming we do? Maybe if there's less commentary about my career choices. He smiled sadly. I promise, no more commentary, just questions. Real questions. I drove home to Queens through empty streets, my phone still buzzing with notifications. The article had gone viral in finance circles. My name was trending on financial Twitter. Bloomberg had already posted a follow-up piece analyzing my strategy based on publicly available information. When I got home to my studio apartment, small, efficient, unchanged by the evening's revelations, I changed into comfortable clothes and sat down at my trading desk. 3 monitors glowed in the darkness, showing real-time data from markets around the world. Tokyo was active, Seoul was moving, Hong Kong showed interesting patterns in the tech sector. I pulled up my analysis tools and went to work. The Trader of the Year award sat in my awareness somewhere, acknowledged but not dwelt upon. What mattered was the work, the patterns, the process that had carried me from $47,000 to $4.2 billion around 2 a.m. I got a text from Sarah. Thank you for tonight for showing me. that it's okay to do things differently. I'm going to take that algorithmic trading class next semester. I smiled and typed back, do it. And if you're serious, I'll introduce you to some resources. Really, really? But fair warning, it's hard work. Harder than most people expect. I'm ready for hard work. Then you're already ahead of most people. I set down my phone and returned to the markets. Tokyo was showing a pattern I'd seen before. A small inefficiency in currency futures that most traders would miss. I ran the analysis, confirmed the signal, executed the trade. Somewhere in Westchester, my family was probably still awake, processing the evening's revelations, learning that the person they pitted was actually the person they should have been learning from. That was their journey. Mine was simpler. Stay focused, trust the data. Keep building. Their numbers would speak for themselves. They always did.